Where's your stop loss? There isn't one. Okay? Because the bank can't blow their account. What happens to most traders when they enter into a trade? It goes into a slight bit of a drawdown. Your body starts reacting like you're getting an allergic reaction. And I'm going to make a very bold statement now. But if you do that, any single person watching this can achieve millionaire status. Trading. I always say that we don't utilize these tools the way we should. This just violated every trading rule that I ever thought existed. We believe that, we are invincible and our trading strategies are bulletproof. And they are always bulletproof until they are not.
What's up, guys? It's Nqobile Tembane from Top Traders South Africa, and I'm bringing you guys another installment of Market Masters, where I sit down with the most prominent and talented individuals in the game. And today I'm joined by an esteemed guest. I'm joined by Mr. Francois du Plessis. Yeah, I know. I practiced a little bit before we came on.
How are you doing today?
I am good. I'm good. How are you doing?
Very, very well, thank you.
Yeah, no, I'm really looking forward to today's conversation. I think I really want to pick your brain about a lot of things, especially pertaining to the industry as well and to trading. But as well, there's a lot of people who are probably watching who's like, hey, who's this guy?
True.
And I think really you want to give people background into your story, into how you got to where you are today, so that maybe somebody sitting at home or listening from work or wherever they're watching from, they can follow some form of a blueprint, or they can get encouraged or inspired and be like, hey, I was there, he's here, so I'm still here. So, I can still get to where you are. Yeah, so let's just take it all the way back, and then we'll get into the more deeper things moving forward.
So I've been doing this for going on a decade now. Which is something I'm very proud of. Mm-hmm. And to say, you know what, I'm still here, been through everything, and it has led me to where I am now as senior market analyst for HFM Southern Africa. Mm-hmm. And it's one of the proudest achievements that I've had throughout my trading career. And that's saying a lot, because the fact that throughout my trading career, I've been able to do quite a lot. I have been throughout, I started as an institutional trader, actually.
Oh,
so I started in banking.
Wow.
And then I went over to retail trading. I went from there on forward, I went into fund management. Mm-hmm. So we worked for hedge funds.
Yeah.
And kind of just grew it from there on forward.
Yeah.
And yes.
That's beautiful. Okay, so before you get too far, I think right now in the retail space, a lot of people are like, yeah, trade like the banks, but you've actually traded for a bank, correct?
Don't trade like the banks.
Yeah, because I think a lot of people, we look at banks and we're like, people want to get jobs there as traders for banks. People want to, but what are the differences between retail trading and trading for a bank? Before we continue with today's episode, let's talk about some of the most common trading rituals and superstitions. Some days are more favorable for trading than others. There's a specific time of the year that affects trading for other reasons other than economic or political ones. It's better not to trade on Mondays. It's better not to trade on Fridays. Better not to trade in December. Well, luckily nowadays, you do not only need to put your trust in unjustified superstitions, but on the obvious facts and information available to you with Octa Space. Octa has made huge strides in the trading industry, where you can quickly analyze the market news and insights right in the app and start trading by using Octa Trader. Octa Space gives a seamless transition from learning into trading. You can do all the following in one app: insights in real time, pattern analysis, technical and fundamental analysis, educational tips, a quick flow to turn an idea into a trade. It may be difficult to start something new by yourself, but it's easier if you're in a community of like-minded people. Octa Space can help with that. You can read posts, analyze them, and also put up reactions. The Octa Trading app is user-friendly and available on the App Store, Google Play Store, and a web version. And don't forget, use the promo code MarketMaster for a 100% bonus on your deposit. Try Octa Space today.
It's two completely different universes.
Sure.
Okay, let's start there. It's two completely different universes. So as a retail trader, it is important for you to know what the larger capital is doing.
Okay.
So you want to know where the liquidity is within the market. You want to still analyze that. And yes, this is what we teach. However, my strategy as a retail trader is vastly different from what any institutional trader will do, especially banks. Okay, some hedge funds will actually apply a relative retail strategy, but not a bank. When a bank trades, you are looking at, first of all, more capital than you can imagine. Take the biggest figure you can think of and double it. Okay, that's what the bank uses in their trading account. So this is where that mentality as well comes from, because I guess at some point, someone probably had a discussion with someone like me, and they said, okay, as a bank trader, how do you trade? And you look at entering certain positions, you look at certain take profits. Where's your stop loss? There isn't one. Okay? Because the bank can't blow their account. That's a difference. As a retail trader, you don't have access to unlimited funds. So for you, trying to trade like the bank, and now you want to enter a trade with, for instance, no stop loss, okay, not a good idea.
Yeah.
Okay, so that's where I'll basically start with regards to, is it important to know what the major players are doing? Absolutely. Why? Because that's where the liquidity in the market is. However, strategy, retail strategy versus banking strategy, not the same thing.
So what? They're not using support resistance or
No. Yeah. From that perspective, we analyze markets very similar. Okay. And when you have a look at their strategy and so forth as well, a lot of it is basically just, and that's why anyone who knows me, anyone who has seen my analysis will see to today still my analysis primarily support and resistance.
Okay.
That's how I was taught to analyze. And I analyzed in that way, and we were taught to get really good at it. Okay, so there was no fancy indicators. Okay, you, at most, if you wanted to, you could maybe have a separate chart open on, TradingView or whatever you wanted to use. When I first started, TradingView wasn't there yet. But if you just wanted to have like a normal trading platform, you could maybe add a few moving averages or stuff like that. But the bank's actual trading platform, there was no indicators. There's nothing of that. So you basically found support and resistance. You had that ability to look for liquidity. Because even as a bank trader, you needed to find that most opportune moment to get into a trade. And it also wasn't so simple to just enter a trade. Now, the following part that I'm going to say, anyone watching this, if you want to add this to your trading strategy, please do. Because why? If you want to enter into a trade, how do I enter into a trade? Okay. Am I just entering into a trade because I have FOMO? Because someone on Instagram is told me buy NAS now? Okay, is that why I'm entering into the trade? Or am I basing this on sound analysis? And as a bank trader, even as a hedge fund trader, before entering into any trade that you want to place, you physically have to write a report. Why am I entering this trade? So, and if you can write a report about why you're entering the trade, you can execute it.
Someone's at home right now, Francois. They're like, okay, we hear you. But what goes into that particular report? Like just a few topic or headlines in the report.
So headlines, first of all, I always start with my fundamental analysis, and I do this to today.
Yeah.
Okay. Does the fundamentals regarding the trade agree with what I am trying to achieve. Okay, so if we look at the general fundamental analysis, all the news reports that are being released, etc., based on that, can I enter into a buy or sell? Once you have that down, you basically just write it down. Okay, based on the following reports, outcomes, etc., that has been released in the last few days, this is the general trend within the market. Now you break it down, support and resistance. So now you add your technical analysis. This is a key level for me. This is where my order block is. This is where that is being placed within the market. And then from there on forward, this is my ideal entry level, and these are my exit points. And then you can proceed.
Okay. Yeah, just to shed some light for people, even for me myself, because I've never thought about the idea of, obviously, you have a trading journal, cool. But I think just the idea of writing a report is just like...
Very true.
It's different. And I think, how does that affect a person's psychology, especially coming to facing a chart?
I would say for me now, that affects my psychology in a positive way.
Yeah.
Why? Because now it adds confidence. Okay? Because what happens to most traders when they enter into a trade, it goes into a slight bit of a drawdown, your body starts reacting like you're getting an allergic reaction. Okay, you start sweating, you go red, your stomach doesn't feel so well anymore, and all you did was enter into a trade. However, if you were able to write why you are entering into this trade, you have sound analysis going into the trade. You get additional confidence based on, okay, this is what I'm doing, this is where I'm going, and because of that, I know my statistics. I know based on everything that I'm doing here, what my success rate is. Because if you are taking the effort to write why you are entering into a trade, you are also taking the effort to journal every single trade you've ever entered. And based on that, you know exactly, okay, based on my trading strategy, based on what I do, this is my success rate. This is how likely this is going to play out. And then from here on forward, now I can say, okay, even if I go into a bit of a drawdown, I'm okay. Because I know my analysis. I trust my analysis, and I can just read it again. I can read it back to myself.
Yeah.
Okay, this is why you entered the trade.
Oh, yeah, that's true.
Even I would even say, as for instance, signal provider within a retail space, this is a good basic practice.
Okay.
Because if you are able to say, this is why I entered into the trade, and literally write it down. And even with regards to that, we are not far away from that being a compulsory thing soon. Okay. I don't want to get ahead too much, but I mean, even if we look at what's changing within the retail space, with regards to the regulator, it's going to be a thing soon. So it might even be a good practice for someone who's watching this and who's saying, okay, I'm busy sending out signals. Start reporting on even if you're just reporting to yourself, but have it written down. This is why I entered the trade.
Yeah, but now you're asking them to do a little bit more work, which nobody wants to do currently.
I hear you.
Yeah.
I hear you.
Yeah.
And I know doing more work is always not a good thing. Okay. And I know we all that's why we all became traders, right? Okay. As every trader, we have two things in common.
Yeah.
We are all lazy and we are all greedy. Okay. Those are the two reasons anyone becomes a trader. Okay. Because you want to make money, you want to make lots of it, and you want to do it in the easiest possible way.
Yeah. Low input, high output.
Yes. However, that additional work that I was talking about, these are the guys who are doing this for a business. Okay. If you are providing signals, if you are providing a service to clients, I'm not talking about someone who's just trading for himself. I'm talking about someone who's physically mentoring people. If you are doing that as a service, that's your business, a little bit more is required from you.
Yeah, no, that's true. Okay, so you find yourself working at a bank, but like, what were you doing before that?
Before that?
Yeah, before working at a bank.
Well, that's actually an interesting one as well.
Oh, yeah?
So I never thought that I would end up where I am now. Okay, absolutely none whatsoever. Even getting into the bank, I don't even know how I got that right. Okay. Because up until that point, I was never in finance.
Oh, okay.
I've always been interested in finance. Okay. I started investing in stocks when I was very young. I bought my first stock when I was 16. So
What stock was it? Do you remember?
No, I actually don't. Hey, I really don't.
Yeah.
But it was physical stocks. It wasn't CFDs.
Gee.
It was
Okay,
physical
nice.
stocks. So I actually invested into physical stocks. I still did it through my bank, which at that time was F&B. So still did it through them, and we went that whole route. And I did kind of everything possible. Okay, I worked in retail. I worked in hospitality. I was all over the show. I traveled a lot, so I got to see a lot of our country. And wherever I went, I was young. So wherever I went, I would work there, and they would be, and we'll stay there for a couple of months and move to a new town and then go work there. And till one day I was offered the opportunity to start within a bank. And I didn't start there as a trader.
Yeah. All right.
So, but literally, I found it so interesting. I loved everything about it. And they had these various educational programs. And programs that would take a year to complete, I did in like 1 month. Then I would move on to the next one. I would move on to the next one and move on to the next one. After a while, I did like almost every educational program they had.
Sure.
And I was able to apply for the position I wanted.
Do you think you were hungry for that information, or what was it that was like driving you at that period?
I think I still am.
Okay.
I think at this point in stage, I still don't feel like I've achieved everything I wanted to do. I still don't know everything I want to know. And I mean, even now, I literally just enrolled for a new course within finance.
Okay.
In the beginning of the week on Monday.
Yeah.
Because again, it's about educating myself consistently so that when I'm speaking to my clients, I know that they are getting the best possible knowledge. And it's coming from that point to say, you know what, it's because of the fact that I'm putting in the effort.
Yeah. And I think so many guys in our industry, they give this idea of the wrong perception of education, because obviously everyone's like 9 to 5, 9 to 5, don't work at 9 to 5 and all that. But also when you actually think about it, it's like we're all here, we're all learning constantly from the market as well. So I think a lot of guys really have this negative perception on education, and they also push that narrative a whole lot, you know.
Yes.
Yeah, no, don't go to school. School's a scam, whatnot. People say stuff, radical things like that. But then again, it's like we're in this industry where it requires you to keep pushing yourself, to keep learning, you know. Like everyone's like, the best teacher is the market. But that's education as well to some degree.
100%. And I know that's one of the biggest questions that I get asked on my seminars. So, as you know, we're traveling all over Southern Africa at the moment. The rest of the broker is doing other countries as well. However, I'm just Southern Africa. So, for me, all the seminars I'm attending at the moment as well, that's one of the biggest questions that I get. And for me, and I'm going to get a little personal now, but for me, this is actually something I get upset about. When someone asks me, okay, Francois, so I want to become a trader. I want to be like you, okay? I'm currently studying. I'm at varsity. Can I quit? And I'm just going to become a trader. And I literally have to sometimes stop for a second, compose myself before answering that person. Because at some point, I almost kind of want to take you and shake you and be like, why? Okay? Because there is so many things that I've achieved that was so much hard work, okay? And then I'm talking to these guys standing there and, they're at varsity, they're busy studying. They have the opportunity to trade right now. However, their parents are paying for this, paying for them to go to varsity and all that. I never had that opportunity. I had to pay for that myself to get to where I am. And on top of that, if you want to take your trading one step further, and you want to make your trading into a business, you obviously require an FSCA license. you can't attain one without a degree. And now someone told you you needed to quit school. You needed to stop studying. You needed to stop learning. And you got robbed. That's the easiest way I can say it. You got robbed. Because at the end of the day, the one thing no one can take away from you is education. You can lose money within the markets. You can blow your account. You can literally lose everything. But as long as you still have that knowledge, you have that education, you can make it back. And you can come back stronger because you still have everything. And if someone took away your education, you are already a step back.
That's true. I hope a lot of people heard you on that particular topic right there.
I hope so too. I really do.
Yeah, no. Okay, so now from bank to retail to fund management. So you've basically just kind of been around. You've done almost everything in the industry, in a sense.
In a sense,
yeah.
yes.
Yeah, now you're a market analyst. What does a market analyst actually do? Let's talk about that.
Market analyst.
Yeah.
Okay, so what do we do? In my position, what do I do? So for me, my primary aspect as a market analyst is education, is teaching all our traders how to trade, what to do, how to analyze the market. Okay. Then on top of that, we obviously write reports, we provide articles, we provide analysis to make our traders' lives easier. And we can do this in two different ways. We can actually do it in a paper format where it gets published on our website and you can go read the full analysis report. Or we do this through live streams where we analyze markets live, we showcase everything to you and help you then grow from there on forward. So that's the second option that you obviously have available to you as well. And then the most fun part of my role is obviously the traveling, the seminars, going all over Southern Africa to meet with people, answer all their questions and help them to trade. And at the end of the day, every single time I can assist people, making more money, growing as an individual, that for me is the most rewarding part. And I actually saw it this weekend when we were in Durban. It was my second seminar in Durban.
Yeah.
Okay. And the last time we were there, I always say when I leave a seminar, when I come back here, I want to know how your life's changed. I want to know your new success story, how things got better for you because of the fact that we were here. And this time, I actually had people join the stage with me and present with me and talk with me. That literally started 7 months ago.
Sure.
Okay. The last time I was there in November last year. And now these guys have a business. They even mentoring. They growing. Everything is going well. But it all started the last time we were in Durban.
Yeah.
And literally, I'm so excited for next year because next year will be the official tour that will be my chance to do round 2 and go have a look at every single person that we had an opportunity to meet, that we had an opportunity to impart into, and have a look at how they were able to grow with the mentorship that we've provided.
Yeah, sure. No, that's powerful. Can I ask this though, because 7 months right now, you're putting it out there, people become mentors in 7 months. Obviously, we live in our industry has some, I know someone saying at home is like, yeah, but 7 months, I can be a mentor right now. Is that recommended by you?
So,
yeah,
it's been 7 months within their journey.
Okay.
And with us. Okay, I didn't say their journey started 7 months ago.
Okay.
So they were trading before that.
Okay.
They were in an essence profitable. They just needed a bit of guidance. And that's why I always say as well, even with the seminar that we provide, 100% of the seminar is not for you. Every single person can attend the seminar, and 5% of that seminar is all you need. But we don't know which 5% is yours. But whatever gets shared within that 5% can change your life.
Yeah.
So you have to sit there for 100% of the seminar, but 5% of that seminar will change your life. And this is exactly what happened with these guys. It wasn't the whole seminar that changed their life. There was a specific 5% that everything just clicked.
Yeah.
And it was like you shifted gears, and now it's better.
All right. Yeah, 10 years in the game. Is it 10 years now officially? Can we
Yes,
say?
it's 10 years, yes.
10 years in the game. Obviously,
Wow.
I think it has given you a lot of time to work on the craft, on the skill that you have over time. I think, obviously, because you wouldn't be here if it wasn't the case. Correct? You wouldn't be here if it wasn't the case, you know. And I think the craft is something that has been so neglected, because I think earlier on I made a statement. I said people are looking right now at low input, high output, because people are not focused right now on, because I like what you do, you know, you write a report before you enter a trade. That goes down to the craft, because you respect the craft, you know. But a lot of people are out here, there's a lack of respect, if we can put it like that, for the craft. People don't respect the craft, because now they need to be on top of cars, on social media, posting every day. They need to be at a different place every single day, and then they kind of neglect the fact that trading is not the easiest profession in the world, if we can put it.
It's not, and it's super stressful. for anyone who is, you know, thinking of getting into trading for the very first time, please go, you know, visit your doctor and get some blood pressure medication first. You're gonna need it.
Yeah.
So, but yes, if you're talking about the craft of trading and how this has grown as well throughout, you know, on my social media and on the broker social media, there's actually a series that went out over the last few weeks that my marketing department put together for a specific topic that I spoke about at the expo in May. And I think that adds into the craft, because there was one specific part of the series which talks about evolution. And I think this is where people get stuck within what we do. Now, for me, my question is always, how long do you want to do this for? And how great do you want to be within trading? Okay. Now, anyone can make a few bucks trading. Okay. And you probably do it on your first trade even. Okay. And you'll enter a trade, you'll make some money, and it can literally happen on day one. Is that going to make you a pro trader? Is that going to make you a professional trader? Absolutely not. Okay, I can go play blackjack tonight, and there's a chance that I could be profitable. Okay, with my one night of playing blackjack. Okay, that's definitely an option. However, within trading, everything revolves for me around the concept of evolution. And as a trader, I need to evolve. I need to be better. And I need to consistently be better. Why? Because the markets are consistently changing. Now, you've been doing this for quite some time as well, okay? And anyone listening to this and anyone watching this is going to be able to comment on my following statement. Traders who started trading after COVID and traders who started trading before COVID, it's completely different. Markets are different.
That's true.
They're not even remotely the same. And how do you get through all of this? There has been no hard times in trading just yet within the last 2 or 3 years. So as a trader, you kind of like eased into it, you know? Yes, markets are very volatile and, you know, very up and down at the moment, which makes for great trading.
100%.
But again, how are you perfecting that craft? How are you how are you giving yourself that edge to be here for the next decade? Okay, for the next 10 years, where do you want to be? And a lot of the traders who started out with me are not trading anymore. I can count on one hand how many people were there when I started that are still trading. Most of them just went on to get normal jobs because this was way too hard. And it's not that this was way too hard, because everyone can learn the craft. Everyone can be taught. Everyone can be taught how to analyze markets. Everyone can be taught how to enter trades. Everyone can be taught how to apply risk management. Mm-hmm. It's your ability to evolve as a trader to be able to apply what you are taught. It's your ability to add a little bit of patience, to add that discipline, add emotional discipline. And if you do that, and I'm going to make a very bold statement now, but if you do that, any single person watching this can achieve millionaire status trading. But it's not an overnight thing.
No, it's not. A lot of people are chasing that overnight success.
Why? Because we all want the Ferrari, you know?
Yeah.
And don't get me wrong, I was literally one of them. When I started, there wasn't so many mentors and so forth out there, and there wasn't so many things available. But I mean, I still remember I funded my first account with $250 to get trading. Mm-hmm. My first trade, I made $250.
Sure.
Okay, I doubled my account with my very first trade. And I mean, at this point in stage, I was working in finance. I kind of knew, you know, what was going on. I understood everything. But with regards to that, I mean, even where I stayed, I didn't stay too far from the Porsche garage. And I literally went to the Porsche garage, and I went to choose what color I want. Okay. Like I was ready. I was like, went to my wife. I was like, babes, just a few more months, you know. I'm gonna be driving that. I'm gonna be driving it in satin black. Like it is gonna happen. And you know what? I blew that account 3 days later.
Gee.
Okay. And it was a bit of a wake up call.
Yeah.
And I blew the next 3 accounts after that as well.
Yeah, because I think at this point you're chasing unrealistic returns.
Yes, 100%. And, you know, when we started the conversation, I made the statement that, you know, within my trading, I wouldn't be here right now if it wasn't for my wife.
Yeah.
Okay, and there was a specific reason for that. When I funded that 5th account, she literally looked at me and she was like, "Are you sure? Because you're just losing money. Okay, I don't think you're really good at this. Okay, I don't know how you are doing this for a job, but I don't think you're good at this. Okay." And I think we need to reconsider.
Yeah.
And that's the moment where I was like, okay, but what is the difference between what I was doing and, now let's take that step back, what I was doing at the bank. At the bank, if I won a trade, I made 0.2% on the trade. Okay, I made 0.2% if I won a trade. Okay, so I needed to win 5 trades to grow my account by 1%. And now, what am I trying to do in my personal capacity? I want to make 100% on every single trade. And I was like, okay, cool. Let's take the step back. Let's perfect this. Let's see how I can make my craft better. And let's risk a little bit. And in the beginning, I was so scared after a while because I already had an ultimatum. This is the last account you can blow. You can't blow anything else. Okay. This is done after this. And what was I doing? I was making 0.5% on a trade. Okay, I was literally taking the smallest positions I could, just entering the trade, getting to take profit. Entering the trade, getting to take profit. And I literally just kept on doing this over and over and over again until I could grow that to become 1%. And again, just doing this over and over and perfecting what I was doing. And that account just kept growing and kept going and kept going, because now it wasn't that I was trying to make ridiculous gains. I was just trying to make gains. And and I was trying to outperform what any institution would give me. Why? Because if you go put your money in a bank, if you go put your money in a hedge fund, what are you going to get? 7-8% a year? Okay. But as a trader, if I tell you, okay, let's make 5 or 8% a month, you think I'm swearing you. Okay, like how dare you tell me all I can do is 5%?
I mean, look at all this leverage.
Yes,
right?
like I can do 50, I can do 100. Okay. But again, let's think about the math here. And I made the statement a little bit earlier. Any person watching this can become a millionaire, can literally achieve millionaire status. If you start your account, 50,000 Rand, okay? You grow that account by 5% a month. That means you need to literally enter 5 trades in 1 month, and each trade needs to make 1%. 5% a month, and you do that for 5 years. That's R1 million. That's your millionaire status, done and done. Okay? Now you go 5 more years. That million becomes 20. Now you're making 5% a month, but you are making R1 million a month. But it can take some time.
Yeah, I think that's what people really don't want to hear. The time thing, that it's going to take some time. A lot of people come to me and ask me about, because obviously I do this podcast. People are like, hey, what do you do? I'm like, I do the podcast about what? Trading, Forex. They're like, I also want to do Forex. Teach me. I'm like, no. I literally say no to a lot of people. And it's not coming from a bad place. It's just you kind of sit down with enough people to understand that, hey, this thing needs to be respected. Trading needs to be respected. It needs to be given time. And a lot of people don't want to put in the actual time because people are just like, yeah, I just want to make additional income. I just want to. I get people all the time calling me, hey, bro, can you please point me in the direction of who can I give my money to because I want that additional income. I'm like, nah, take it to the bank or take it to a fund. Go put it in a fund rather than go dealing with individuals. Yes, it could possibly make money. Possibly, but it's not the right way to do things, so I discourage a lot of people from joining the industry because people just want to join because of the hype.
That is true, and a lot of people do want to just join because of that hype and so forth. However, there are so many people who joined because of the hype, because remember, within 2020 COVID time, how many people started trading?
Yeah,
within COVID, it was a massive amount of people. How many of those people who started trading during COVID are still broke? Okay, guess what, guys? Next year, it's been 5 years.
Gee, 5. Wow,
it's been 5 years. Next year, okay.
Yeah.
If you just took this seriously since COVID,
yeah,
millionaire status.
Yeah, and the thing is, again, it's not what I'm saying is that guys don't go trade. I'm just asking, how serious are you about wanting to do this thing? And people don't want to be serious.
And that is, at our seminars, when I sit there, I always ask the following question. When I start my session on trading, I ask, how long have you been trading? Like, put your hand up, 6 months, 1 year, 3 years, 4 years, 5 years. And literally, but 3 years plus, it's 40% of my crowd. And you know what? 40% of my crowd is still broke. However, we do get the people that once we leave the seminar, once we've imparted that knowledge, once you've actually made some things clear, who do start taking trading a little bit more seriously and start thinking about things a little bit differently. And this is the difference between any profitable and non-profitable trader. It's your mindset. How are you thinking about your life? I literally posted a video about this and someone commented on my social, in 5 years, you might be dead. And I was like, yes, and you possibly still going to be broke. Okay? Because the fact that you are still not taking it seriously. And 5 years, it sounds like a lot of time. It passes like this.
That's true.
Okay? Like we said, next year, it's been 5 years since COVID, guys. And that's all you needed to become a millionaire. If you just took it seriously.
Let's go back to you blew 4 accounts, you went to the 5th account. But I think from what I'm looking at currently from it was because you wanted these unrealistic returns. You wanted to make the money quickly because that first trade went so well.
I wanted that Porsche, dude.
Yeah, so I think, what can you say to somebody who's constantly chasing those unrealistic returns? Because obviously that goes down to the culture of over leveraging, goes down to the culture of flipping accounts. It goes down because people want to make that money, those unrealistic returns. But now we just kind of broke it down and said, hey, look, 5 years, this is what could happen for you if you just kind of took a step back. But what would you say to those people as well who are just like chasing the unrealistic returns?
Simple. I know that when you start trading, it is super tempting to consistently chase that flipping of account aspect. However, what is harder than waiting just a little bit, that delayed gratification, okay? So if you delay that gratification just by a little bit, again, I'm not saying go and make 5% a month now, okay? That was an example I gave. If you are a relatively conservative trader, you can be risking 3% on a trade, and you can be making 15 to 20% a month, maybe even 30% a month. But be conservative. Delay that gratification a little bit. Why? Because every time you blow an account, you are one step behind again. Because let's, for instance, just think about those 4 accounts that I blew. That was about $1,000. Okay, it's $250 an account. But what if I just went and I was a little bit more conservative? Maybe even a little bit aggressive. Okay, maybe risking 5% or 10% on a trade. Instead of full margining every trade I entered. And we grew the account. And I did exactly what I did with the following 3 accounts. Because why? What did I have to do to be able to get those other 3 accounts? I had to go back to work and I had to save. And that takes time. Now, I could have grown my account slowly. I could have saved. Instead of staying on a $250 account, I could have gone up to a $500 account, $750 account, $1,000 account. And I could have consistently been adding to the account, which then makes that 10 or 20% that you are making per month so much bigger the entire time. And that's the biggest thing. Just delaying that gratification just a little bit puts you in that position to not consistently start at 0. Because every single time you start at 0, that's the difficult part. And that's some of the clients that I then need to deal with. Because I phone these guys and I'm like, what are you doing? Okay? Because why? They are funding their accounts, as well as when you are funding your account, when you are doing this, you want to obviously fund. I know we all start with small accounts. We kind of want to grow that up, okay? And you want to grow it to something bigger. However, you need to kind of get used to what you are able to do and how you are able to manage risk. And to an extent, I would almost say that the education that we got was to blame for some of the full margin trading that we are doing now. Okay? Now I might get in trouble because for what I'm about to say.
Are you on thin ice?
I'm on thin ice now, okay? This ice is about to break. But what mistake do we all make when we are starting out trading? What's your first account that you ever get? It's not a real account, it's a demo.
Yeah.
Okay. What's the balance of that demo account?
Oh, it's the standard 100,000 USD.
Who here watching is going to fund their first trading account with 100,000 USD?
Yeah.
Okay. So what do? We start out 100,000 USD. And then you apply the best risk management known to mankind. Okay. And you are making $10,000, $20,000 a month on that account. And you're like, buying the Porsche. Okay. This is easy. Why? Because you're making $20,000 a month. And then you move over to a real account and you fund the account with $100. And you might still be making 20% a month, but instead of $20,000, it's now $20. And our brains don't always compute that the percentage is the same. And in you mastering your craft, we need to start learning to focus on the process and not the results. And what I mean by results is not the money. The results are percentage based. Because if we are growing 20%, if I'm trading, I've been doing this for 10 years. If my account grows by 20% and your account grows by 20%, I'm not a better trader than you. We are the same level. What is the difference between the two of us? I've been doing this longer. And that means my gains are better. But process, we are the same. We are both equally good traders. And because of that fact, you can get to where you need to be. So when you start that demo account, make it something realistic. Make it within range of what you can actually fund your account with.
Yeah.
So that you can, from the word go, program your mind on what it's supposed to be doing.
That's true. And unfortunately, people just overlook that part right there. They think they can just jump in. And actually, I want to talk about this. Obviously, there needs to be some form of leveling up in the trading, and that kind of messes. Because I think a lot of people, I was making $50 a month, and then now I'm making a certain amount a month, and then kind of find themselves going back again. How does one maintain that process, because I'd like to believe it's a very slow and gradual process. It's just going like it's that curve.
It is. And it's sad to sometimes see how many people are not growing.
Yeah.
And I'm going to say why in that regard as well, because of the fact that within my position, I get to meet a lot of people. I even get to meet mentors and everyone teaching people how to trade. And then something very sad happens where you meet people who've been mentoring for 5, 6, 7 years. And this guy's still trading $100 accounts. And they've never grown. They've never leveled up beyond the fact of, what am I doing? I'm flipping $100 accounts. Okay. Remember, flipping $100 accounts, there's nothing wrong with it. But for most people, if you are just flipping a $100 account, yes, that's something that you can do. That's something that you can do on a Friday with your friends at a braai. Okay, I've done it so many times where we all just kind of have a little trading competition on Friday afternoon before the market closes. Okay, who can flip $100 faster?
Yeah.
Is that trading? No, it's you guys just having a bit of fun. But as you are growing your account, yes, we want to make withdrawals. Okay. However, how do we go about this?
Yeah.
So now I'm growing my account. I make X amount of percentage growth. Some percentage of that, let's say half, is mine. Half goes to growing my account. So that next month, I can grow it a little bit bigger. I can grow it a little bit faster. And I can continuously doing this. And I can add money into this. And we can follow that entire course. Because it's the saddest thing to see when you meet someone who's been trading for 5 years and they're still trading with small accounts. 5 years in, you're supposed to be trading $50,000 accounts, $100,000 accounts. And you're supposed to be making proper gains on your account. But you need to consistently be compounding that. There's a reason compound interest is the 8th wonder of the world. And all we need to do is just continuously compound. Build that house, brick by brick. And eventually, it'll be a beautiful place to stay in.
Yeah, they just want to rent the houses.
Yeah, we can't just rent. Okay, trading is not for renting. We need to build the house.
No, 100%. Okay, let's get to the trading. I think, obviously, somebody made a statement, I think a couple weeks back or months back, who were having a conversation. They were like, a lot of people are taught to analyze the charts, but a lot of people aren't really taught how to make money from the charts, which was two completely different things. But then you think about it, and then you're like, okay, eventually, what is a good trade? Because I'd like to believe, yes, everyone can trade. We can place trades every day. A person can show up at 3:30 every day, place a trade. But again, is that a good trade for you, for an individual? Because I think a lot of people tend to overlook the fact of, they just always want to be trading, and they don't even journal, so they don't even know what's good or what's not good for them. So can we just discuss what is a good trade, and then we'll go on the other side and discuss what is a bad trade.
I love the statement that you just made, because I fully agree. Okay, analyzing markets and being a trader, two different things. A lot of people can be analysts. Okay, not a lot of people can be traders. Even if you go to a hedge fund or a bank, you will also see there will be an entire room with analysts. But for every 10 analysts, there's one trader. Because it takes a special person to make money on the actual trade. A lot of us can sit there and say, this trade is going to make money, this is going to go there, this is going to go there. Enter the trade, show me. That's a different step.
Yeah.
Okay, enter the trade, show me. And I've seen so many people who also, they make all these predictions online. Even now, we're still a couple of days away from NFP. I'm already seeing TikTok going, buy now, buy this, buy gold, buy NASDAQ, buy the... And we're not even close to the NFP day yet. Okay? Why? It's easy to make the prediction. Show me. That's a different aspect. And that aspect, again, comes to you needed to be a little bit more patient, because there is a big difference between just placing a trade and a good entry. Because that's why I say, use something simple, support and resistance. I got asked this question the weekend at the seminar as well, where the person, he uses order blocks, support and resistance, same thing.
Yeah, true. don't let them hear you say that, okay. By the way.
Same thing, guys. Okay, we just think of new names every now and then. Okay. Yeah. And also just trades the breakout. Okay, and again, now you're thinking, what's your risk management on this? And I always ask people, when you're entering into a trade, and this is where the difference between a good trade and a bad trade comes in. When you enter into a trade, before you push the button, you need to know where you are getting out of the trade. I need to know where my stop loss is, and I need to know where my take profit's going to be. Once you've entered the trade, it's too late to figure this out, because you're already in. Now you want to place your stop loss. Now you realize, oh shucks, I think my lot size is too big. Okay, if this thing hits stop loss, I'm gonna be dead. Okay, count's blown. You needed to know that before you enter the trade. And that stop loss, you have certain rules on how you calculate that stop loss. Maybe you use an indicator. Maybe it's on the opposite side of your support and resistance area. So again, how many pips is that? So now you've calculated where that needs to be placed. Now you work out what is your stop loss, what does your lot size need to be. And for instance, if you are trading the breakout on a position like that, if the market moved too much, so that's when say you're trading on an hour time frame or 15-minute time frame, and the spike through that support was too big, that if you had to place your stop loss, your take profit would be out of reach. No trade. And it's that simple. We need to get to a point where trading becomes extremely rule-based. It becomes extremely black and white, if I can put it in such a way.
Yeah.
Okay? It needs to be yes or no. We can't say maybe in trading. Okay? If I enter this trade, does it abide by all my rules? Yes or no? Not, but I saw this guy on Instagram. You also placed this trade. I'm like, but you don't know when. And that might be an hour ago. And an hour in trading is a lot of time. An hour in trading is the difference between a stop loss and a take profit. It's the difference between good risk management and bad risk management. And from me, out of personal experience, I have always learned that it is better to sit and look at a trade and wish that you were in that trade than sit and look at your own trade and wish you never entered. Because that's two completely different feelings. But if I enter a trade, it's always yes or no. Does this abide by all my rules? Yes or no? Yes, enter the trade. No, don't enter the trade. And if you say no the whole day, then today was not a trading day. We don't have to be in the market every single day. There's 22 trading days a month, guys. We have 22 trading days in 1 month. If you do something simple, like, and let me up the risk a little bit so that everyone can more or less relate now. Let's say you risk 5% on a trade. And you have a trading strategy that has a decent success rate. And you will even see if you apply yes and no to the trading strategy, your success rate might even increase. If you literally, let's say, only trade out of 22, you trade 15 days. And of your 15 days, 5 you lose money, 5 and on 10 of them you make money. You are still up 25% for the month. And you only traded 15 days. And you were only correct 66% of the time. Which, again, so many people think they need to be right 80, 90, 100% of the time. 66, we're okay with that. 5% on a trade, you are up 25% for the month. If you compound that, 3 months, you double your account.
Waiting. It's a problem. You know, on the other side of this, obviously, I think the other killer is the bad trades that lead to an individual making money. Because I think that's where a lot of people develop a lot of bad habits.
That first trade. Just randomly pushing the button, all of a sudden market goes wee, and you're like, yay.
Yeah. But you know, that's what I think about a lot of. I know people will be like, yeah, Nqobile, stop coming for full margin traders. But there's a particular reason why they say that. A lot of full margin traders end up making a lot of bad trades, which make them money, and then there's a delusion of, nah, I'm a profitable trader. But actually, go sit down, go look at your past trades. Are they good trades? Not necessarily.
And this is, again, where the journaling part comes in.
Yeah.
We need to keep track. If you treat trading like a business, it'll pay you like one. Treat it like a joke, and you'll be the circus. So that's the easy part to it. But even on that topic, I've seen full margin traders, and I have friends who are full margin traders. Okay. But again, doing it in a responsible manner.
Okay.
Now, that's a different topic all on its own.
Yeah.
Okay. Why? Because when we trade certain events, especially news events, I love trading news. Okay. I trade news live. My guy over there is getting super happy when I said news events because he probably watches most of them.
He only trades a few times a month. That's what he always says.
And that is the most perfect way to trade.
Yeah.
But when I trade a news event, before we came here, I traded a news event. Okay. Did my analysis on the news event. I placed my trade and the trade, take profit. But if the trade did not work out, there is a stop. Now that stop can be a physical stop loss, or it can be a blown account. Okay. And especially on trading news events, if it blows your account, like for instance, as a broker, we offer negative balance protection. Negative balance protection means that if my account blows because I entered way too many positions, I went full margin and I went into a minus, they reset my account to 0.
Yeah.
Okay? Because there's insurance for this. However, if I blow my account using that strategy, I don't have to go and save up again. Because why? You have a separate part of your account, which is your wallet. And you have money in your trading account. And let's say I have $10,000 in my wallet. And I have $1,000 in the trading account. If I blow on this news event and I blow the $1,000 because I went full margin, technically speaking, I didn't go full margin. I still have $9,000. Which means I have 90% of my capital left. So that full margin trade was only 10%. Now, if you are doing it in that manner, that's a responsible way to do it. That's a responsible way to go around activating a full margin trade, because you can add as many positions as you like, because your account cannot go past zero. Yeah. And we know when the market moves, especially, NFP, CPI, interest rates, market moves massive amounts. And slippage within trading is a real thing. Because, again, remember, if I'm entering a trade, I'm entering a buy, that thing hits stop loss. Someone needs to be there to take over my position. The money doesn't just disappear into thin air. Okay? It has to go somewhere.
Yeah.
Now, if the market moves too fast and there's no one to take over the position, we have slippage.
Yeah.
If you went full margin and blew your account, that was 10% of your account because the rest is safely lying in a wallet. Okay? That's okay. Slippage can happen. Negative balance protection will kick in.
Yeah.
Will reset my account to zero. Okay? Which means I'm insured against slippage. How great of an opportunity is that?
Yeah.
Okay? So just something like that. And again, and that's what I'm saying, with regards to, I'm not dissing full margin traders, because like I said, I have friends who do exactly what I just said.
Yeah.
Who go full margin on these trades. And if it doesn't work out, they are protected and they have additional capital. My problem with the other half of the full margin traders, the ones who are following a mentor who advertises full margin trading, if I can put it that way, that mentor has additional funds to replenish his account. That's not his entire life savings. But now we have new traders putting their entire life savings into a trading account.
That's true.
Going full margin. And then they are going from having an okay life to a horrible life because now they have zero life savings left.
Yeah.
And for me, that literally equates to gambling. Now, there's so many ways that we can make money within trading. And I honestly want, if I could have my way, every single person in this country would be a trader, for the fact that it gets you that additional income. It gets you that level of lifestyle that you can do whatever you want, whenever you want it, that we all want to do. And it gives you the freedom to do what you want to do. And I think that's something that a lot of people sometimes misunderstand as well, with regards to that freedom part. We can't all be full-time traders. Okay? Someone needs to do podcasts.
Yeah.
Someone needs to fly planes.
Yeah.
Someone needs to be a doctor. Otherwise, we're all going to die. But all those people can trade. And all those people can be profitable traders, and they can all make money to have the lifestyle they want. And still have that 9 to 5, but let the 9 to 5 be something that you truly enjoy.
Yeah.
And again, as you said, we're not dissing full margin traders here. Just be open with what you are doing. If you are going full margin on a trade, be transparent with regards to the people who are following your trades. That, listen here, guys, this is 10%, 5% of my trading balance that I'm risking on this trade. Do the same thing with yours. But if you're going full margin on a trade and you lose that trade, and then there's nothing left afterwards, and you need to go back to work to afford to refund your account, that's where I have a problem.
Yeah. What's your current daily trading routine?
So my current daily trading routine is extremely simple because of the fact that I obviously, as I said in the beginning, I travel a lot.
Yes.
Within my job at a broker, I have things that I need to do every single day. Okay. They don't pay me to just look at charts the whole day. I also have to work.
100%.
Okay. we spoke about, paying bills earlier. You still gotta kind of do something for them to pay you.
100%.
Okay. So again, we spoke earlier about that evolving within what you were able to do. And I was able to evolve my trading strategy, my personal trading strategy, to adapt to exactly what I am doing currently. So, as I stated, I love trading fundamental events. I'm not a fundamental trader, by the way.
Okay.
But I do love trading fundamental events. I'll explain the statement.
Yes.
My fundamental events plans my trades. So, like, for instance, if you ask me on Sunday, when am I trading this week? This week, I planned out 3 trades for me to take this week. So this entire week, I traded 3 trades. I'm going to be trading 3 trades. Okay. On Monday, I traded PMI at 5 o'clock. Today, I traded ADP at 2:15. On Friday, I'm trading at 2:30, trading NFP. And that's how I plan my trades, so that I only am required to maybe trade for about 45 minutes a day. Because that's the amount of time I can set apart to say, okay, now I'm trading. Then what I do is I will sit down half an hour before the event. Normally take the first 5 minutes just to calm down a little bit. Because you have a lot going on in your life. I don't care who you are. There's always something going on in your life. So when you are starting a trade, when you are looking at entering into a trade, have some form of peace within yourself. So for me, I sit and I listen to music just for like 5 minutes. I'm not saying go sit in the corner and go,
Is that like a form of a ritual? You've decided
100%.
This is what you do.
It's just so that I can calm down. Okay? Because your mind is everywhere normally during the day, especially if you're at work. You're busy working on projects. You just spoke to a client. Maybe just had a fight with your boss. Your wife phoned you and said something like a tap burst at home, and now you're worried about that, and you can only fix it at 5 when you get home, and you're stressing out. So take 5 minutes, clear yourself, clear your mind, make sure that there's nothing bothering you. Okay? I'm not saying everything in your life should all of a sudden be sunshine and rainbows and unicorns. Okay?
Yeah.
Just calm. I switch my phone off. No one gets to talk to me for the next 45 minutes. Anyone who, no one's going to die in the next 45 minutes. Okay. So now I can enter into my trade. Start doing my analysis. This is a fundamental event, so then I'll still look at what the news is planning for the event, etc. I will then do my technical analysis. Why do I do my technical analysis? My technical analysis shows me where I can place safe entries. Okay? We spoke about what's a good trade and what's a bad trade a little bit earlier. And if the market is too far, that's what I was to say, everything is pointing towards a sell. But as per your technical analysis, that entry would be too far down. Then that's not an entry. It's a bad trade. And then we're going to wait. And again, so you do your analysis. I wait. I place my orders because I love trading with pending orders. So I place my orders about 15 minutes before the news event takes place. And once the news gets released, if the market shows the news event, obviously based on the results, I know what I can do from there on forward. If the market hasn't completely spiked just yet, I might add a few positions, or by that time my order would have triggered and I'll just manage from there on forward. But that's kind of it. It's simple, straightforward, nothing difficult to it. I believe anyone can do it. And it doesn't require a tremendous amount of time. And I can plan my entire week like that. I know exactly when I need to sit down and trade, which means I don't need to babysit charts. Because I've seen traders, they sit there up, down, up, down, up, down, whole day. And you get consumed by it. And then you start complaining about people working 9 to 5. But I'm seeing you working 6 to 9 watching a chart. Okay, your 9 to 5 just became a 15-hour shift. Why? Because you're watching that chart waiting for trades. You just gave away all your freedom that trading brought you. So, yes, there is still a little bit of things that we need to do. Yes, there are some things that happens during the day. But for me, it's about proper planning exactly where I want to place each and every entry, when my trades will be placed as well, and sitting down and trading that. This is why as well, when I host a live trading event, my live trading events are not 3 hours. It's 45 minutes at most.
Yeah.
Okay, because I'm going to log in 20 minutes before the event starts. I'm going to show you my analysis. I'm going to show you what I want to trade. We're going to trade the trade together. And then as per my trading strategy, 5 minutes after the event, if my original trade hit take profit, I can enter a second trade. I'll enter my second trade. If that didn't hit profit within 5 minutes, I don't enter the second trade. And that means the entire trading session is half an hour.
Yeah.
That I'm trading with people live online. And it's because of the fact that you don't require more than that if your trading strategy applies to something in that regard.
Yeah, you're speaking right now about the strategy right now. I want to talk about strategy compatibility before we wrap things up. Because, a lot of what I like about you is that you're currently traveling, you're meeting a whole lot of new people, which is really great. But I bet one thing is that the conversations that you're having with people right now chasing, they want to change strategies, or they want a new strategy and whatnot. And I want to talk about strategy compatibility, because I think a lot of people don't want to commit to one strategy because now, hey, they're seeing that new strategy there. And sometimes they feel like their strategy is not working for them because they've lost like 3 trades in a row. So how does one actually know is that, this strategy is for me?
Every single one of us has a different strategy that we trade. Okay. When we travel as a broker and we have seminars that we host, at that seminar, I have 200, 300, 400 people sitting in front of me. You know what the crazy part is? Every single person who sits there has their own trading strategy. And here's the extremely crazy part. Every one of those trading strategies are profitable. Now, if we're talking compatibility, your trading strategy needs to be compatible to your lifestyle, to what you need to do right now. The trading strategy that I'm trading right now, the one that I just explained, I haven't been trading that for very long. It's about 1.5 years now. Why? Because I developed that trading strategy to be compatible with my current lifestyle. When I was able to sit and watch a chart for, 6 or 8 hours a day, I had a different trading strategy. And that's kind of how it started out. Because I was meant to believe. Why? Because, again, coming from an institutional background, that was your job. You just literally looked at a chart the whole day. Okay, it was your job just to literally sit and find trades. And when I started as, full-time retail trader, I kind of duplicated that. I made it my job. I sat and I watched charts for 8-9 hours a day. Now, from there on forward, it kind of evolved a little bit. Because why? I wanted a little bit more freedom. So I evolved my trading strategy. I made it adaptable to what I wanted at that point, which meant that I traded 2 hours in the morning, UK session. And I traded 2 hours in the afternoon, US session. I was still trading for 4 hours a day, but I had more free time. Then we obviously started working. There was business involved, etc. You had other ventures that you went into, all the way to where I am now again, where I have a full-time employment. And obviously, I can't be sitting watching a chart and expecting to get paid at the end of the month. Okay. So again, my trading strategy had to evolve. So from an adaptability point of view, when we give our classes and so forth as well, I always tell people that analyze your lifestyle first. before choosing your trading strategy. If you are someone who, for instance, one of the towns we went to was a mining town. The people worked 12-hour shifts. And I sat with them and we were looking at trading strategies that were compatible to every one of the 3 trading sessions, so that you can enter specific trades during the Asian session, for instance, when most of the people in South Africa are asleep. However, these guys were awake. They were working shifts. So if they wanted to enter a trade during the Asian session, they were awake. They were able to do so, but it was compatible with their lifestyle. Now, for me, I'm not trading Asian session anymore, okay? For me, I'm sleeping at that time. So not a compatible trading strategy. So I have to analyze my lifestyle. I have to see, do I have time during the week to actually maybe monitor a day trade? Or am I rather going to have a look at a swing trade? So what am I going to do? I'm going to do my analysis on a Sunday. I'm going to look for specific opportunities. We have so many tools available to us now as well. I mean, a lot of the trading platforms nowadays, you can place an alert. So if you identified a certain trading opportunity, you can place an alert. The alert will pop up on your phone. And all you need to then do is literally place the trade, make sure everything works out. And again, you've done this once a week. So you've literally done that once a week because it's compatible to your lifestyle.
Yeah.
Or I can analyze markets in the morning. I can maybe enter a couple of trades. I can go to work. I can come back and I can look what happened. And this is why as well then specific take profit and stop losses come into play. And I always say that we don't utilize these tools the way we should. Because if you were utilizing take profits and stop losses the way they were meant to be used, you can adapt it around your lifestyle. Why do we babysit trades? Because you consistently watching that trade, because if the market spikes, you are screwed.
Yeah.
But if there was a stop loss, I know where it's going to go. I know where it ends. And if you are comfortable with that end, your lifestyle becomes easier. So always have a look first. How much time can I set apart for this? And now you go and you find a trading strategy that is compatible within that. And if you have a good trading mentor, your mentor should be able to guide you in finding something within that range and basically assist you from there on forward to find something that is just for you.
Yeah.
Because none of us are the same. As people, none of us are the same. None of us have the same daily routine.
Yeah.
So we can't expect our trading strategies to be the same.
So true. So true. No, Francois, thank you so much. That was so enlightening. I wanted to ask you about, one last question. Your biggest loss that you've had. And I always tell people it doesn't have, what I'm asking right now is not what's the most money you've lost. I'm asking what's the biggest loss you've had on the charts. Doesn't have to be monetary loss, but just on the charts that you experienced. And then after that, I'm going to ask you to answer the lesson you took from that loss.
Ooh, okay. So it's not the first time I've been asked this question, which makes it fun.
Yeah.
However, it doesn't make it any less emotional because, again, I think we have to consistently analyze ourselves from time to time as well.
Yeah.
And I actually had the conversation regarding this specific question with my wife yesterday while I was driving back from Durban. And I realized something this weekend because someone asked me this exact same question. And while I was answering the person, I realized something. Okay, so I'll tell you at the end what I realized. And then let me tell you first what happened. So the biggest loss on the charts, and it was also my biggest monetary loss. Was March 2020, COVID crash. Okay. I was in a GBP odd trade. I was in a sell.
Okay.
If anyone wants to go look at the chart,
Yeah.
the market did not sell.
Yeah.
So if you want to rewind your chart, you can go have a look. I can't remember the exact amount, but I remember that the market spiked in excess of 15,000 pips. And I had a stop loss, but the market moved so fast that my stop loss got jumped. And this led to quite a significant financial loss. And this happened at 4 o'clock in the morning when this spike took place. I never woke up at that time. I don't know why that day I woke up at 4 o'clock in the morning. But I woke up at 4 o'clock in the morning and something just said to me, like, dude, get out of bed and go to your laptop. And my MetaTrader was always open. So I was at my desk, screen was open. And I looked at this chart, and I honestly thought that I was dreaming. Like, I thought this is impossible. It can't be. Okay. This just violated every trading rule that I ever thought existed. And I think that is one of the things that when you have traded through a market crash, that's the time when you can start calling yourself a real trader, because that's when things change significantly. And we've had a few of them. I mean, we had one in 2008 as well. We had the 2021. We had one in 1989 as well. So there's been a couple. So I met someone this weekend who traded through all three. So that guy's battle tested.
Yeah.
But that specific loss changed me so much. What I learned from it is at that specific time that my risk management strategy was still not good enough. And what I meant by my risk management strategy was still not good enough is I was only trading one specific strategy and I was doing all of it in one account. And this is where I learned the power of diversification, because I had all my money in one trading account. And when the market spiked, that was all my money in one trading account that went the other way. And if that was diversified a little bit, there could have been additional ways to mitigate the losses. Wouldn't have prevented the loss, but it would have mitigated the loss. And I actually realized, this is the part where I realized, where someone asked, what do you currently still have in your life that you have carried from that trade? To this day, and it doesn't matter if it's Monday or Sunday, 4 o'clock in the morning with zero alarm, I wake up, I take my phone, I look at my charts. Okay, it's like that PTSD has followed me for the last 4 years. And I literally only realized that, literally on Sunday when I was asked the question. I was literally like, wow, I still wake up at 4 o'clock for the last 4 years. And like I said, it never crossed my mind once in the last 4 years that happens. But that's how much, again, why I talk about psychology so much. Because to think that just that one loss affects your mentality, your psychology so much that your body physically wakes up at 4 o'clock in the morning to have a look that everything's okay.
Yeah.
Okay. You know what's the worst part? I'm not even always in trades. I mean, it wakes me up on a Sunday when the market's closed. So that I can still have a look that everything's okay. And again, that's where that diversification mindset came in. And this is why now I have diversified my portfolio a lot more to mitigate for circumstances like this. And that would be the biggest thing that I have learned from that, is all your eggs one basket, that is the worst thing that you can do. Now, I know as a trader, we believe that, you know, we are invincible and our trading strategies are bulletproof. And they are always bulletproof until they are not.
Yeah, true. Francois, thank you so much. I know there's still a whole lot that we need to talk about, but unfortunately, yeah, I guess today is not the day for that. But no, thank you so much for just coming here and just pouring out and pouring into people's lives as well. I'd like to believe that someone's life has been touched out there.
It's an absolute pleasure, and thank you so much for having me.
Yeah.
And I look forward to doing this again.
Yeah, 100%. No, thank you guys so much. Hey guys, thank you guys so much for watching. It's myself, Nqobile Tembane from Top Traders South Africa, and I'll see you guys same time, same place next week. And we're out.